Today, we will talk about the Hope Credit. The subject of today's topic is the Hope Credit and its replacement, the American Opportunity Tax Credit, AOTC. The Hope Credit, or the Hope Scholarship Tax Credit, was a non-refundable education tax credit offered to eligible American taxpayers. Qualifying students could claim this tax credit for their first 2 years of post-secondary education. The Hope and other lifetime learning credits were enacted to encourage higher education and provide a measure of tuition reimbursement for parents or students who are paying college tuition and fees. The American Opportunity Tax Credit replaced the Hope Credit in tax year 2009. The Hope Credit was one of 2 non-refundable education credits available for taxpayers. Recipients could take the Hope Credit for tuition and fees and other expenses such as books. Room and board, medical expenses, and insurance do not qualify for the Hope Credit. The student incurring the expenses could have been either the taxpayer, spouse, or dependent. The other available credit is the Lifetime Learning Credit, which could not have been claimed with the Hope Credit. As of 2009, the Hope Credit became part of the American Opportunity Tax Credit. As of 2022, the maximum AOTC credit is $2,500. Any individual who incurs qualifying educational expenses can claim an education credit. Qualifying educational expenses include tuition and fees. Parents who pay tuition and fees for their children can claim this type of credit on their tax returns, subject to certain income restrictions. The American Recovery and Reinvestment Act expanded the Hope Credit in 2009, making the credit more accessible to parents and students. More people qualified for the Hope Credit under the American Opportunity Tax Credit. This expansion made the credit available to a broader range of taxpayers, including those with higher incomes and those who owe no tax. Taxpayers can claim the credit for up to 4 years of post-secondary education to reduce the costs of tuition and other eligible expenses. A qualified educational expense includes tuition paid to the school and expenses for books, supplies, and equipment. Here are 4 key takeaways. 1. The Hope Credit allowed eligible students to qualify for a maximum $1,800 income tax credit for the first 2 years of college. 2. This credit was non-refundable and could only reduce a taxpayer's liability to zero. Any remaining amount from the credit was automatically forfeited by the taxpayer. 3. To qualify, taxpayers were subject to eligibility requirements such as the income thresholds of the household and the enrollment status of the student. 4. In 2009, the American Opportunity Tax Credit replaced the Hope Credit. Hope this would help. Thanks for watching.